I will just. All right, folks, welcome to our Tuesday night call. Every Tuesday and Thursday, we will be featuring different leaders, different Forex traders inside of our company and our organization. So I'm excited to introduce the educator that we have coming up tonight here. But before we get started, let me see who is in the room. Let me see if I got the right people in the room. Here's my question to you. Where are you checking in from? Represent your city, state, country, wherever you are around the globe in the country. Let us know where you're at. If you're international, let me know that you're international. What's up, Leroy, out of Victorville, California? Happy to have you on. What's up, Mr. Andre, English, representing Hinesville, Georgia? Welcome to the call. What's up, Gage? I hope I say your name right. What's up, Gage? Good seeing you on. We got Mr. Witcher. Come on, out of Virginia. Let's go. We got 2-2 in the building representing Detroit, Michigan. Let's go. We got Dallas, Texas in the building as well, too, y'all. We got Boston, Massachusetts in the building. Oh, out of Boston. Let's go. We got Boston, Massachusetts in the building as well, too. Shout out to Mr. Trader Miggs Miguel in the building out of Thailand, living his best life abroad. Let's go. We got Chicago, Illinois in the building. Let's go. Great evening, everyone. We got, what's the big box? What is that? Okay, Josiah, welcome to the call. We got Council Bluff, Iowa. Council Bluffs, Iowa in the building. What's going on? Patrick, I believe Patrick Bent. We got Southfield, Michigan in the building. Let's go. 313. We got Juan out of Bronx, New York. Let's go in the building. You see y'all see my cat, this Russian blue. I don't know why. She loves just pass through. Let me know she here. Okay. How many, on a side note, I bet y'all couldn't even imagine that I'm a cat owner, y'all. Okay. Right? Y'all didn't imagine that. I couldn't imagine it either. It took 16 years of marriage for me to go get those cats. I didn't get one. I messed around and got two. Listen, I gotta admit, they became my cats. I love them. Okay. I didn't realize you can get a dopamine release. Okay. So back to it here. But we got Juan out of Bronx, New York in the building. We got Sincere out of Florida in the building. Come on, y'all showing up, showing out. Let's go. We got Greensboro, North Carolina in the building. What's up, Nicole? Orlando, Florida in the building. Sincere. We got Josiah out of the Bronx. Let's go. My guy Mike was all in the gym today, getting folks through the system. As you guys know, we got a huge health and fitness community. So tomorrow, and I haven't released the flyer yet, but tomorrow we're gonna have a phenomenal event too. So just make sure you stay on, because I'm gonna share that event with you at the end of this as well too. So we got West Palm Beach in the building. Mike, welcome to the call. And we got Martin representing West Palm Beach, Florida as well too. So let's go ahead and get this call started. Thank you guys for being on. Like I said, we do this call. We try to do this call every night, and my goal, okay, is to show you all that there is a better way that you can create income, create a stream of income in your life, okay, outside of your job. How many of you, okay, by the show of saying 111, or if you have your video and you raise your hands, how many of you are just now having the epiphany that your job is what's not gonna retire you? Your job will not retire you, okay? How many of you have that reality check right now, that you are being raised in a different, that's right, in a different economy than your parents and grandparents? Okay. How many of us realize, like, holy crap, if I am going to live this American dream, right, for those who are in the United States, okay, and I'm going to buy a home, that I got to make at least 10 grand a month. Anybody have that epiphany yet? Okay. If you haven't had that epiphany, I'm giving it to you. Okay. Like, I look at my daughters. I have 5 children. My oldest daughter is 26 years old. My middle daughter just graduated from college at the age of 21 years old. She's turning 22 this year. And I'm looking at them like, man, I got to get my daughters in position to get a home right now. Okay. If you don't already know that, that's wealth. That's where your wealth is going to come from. Okay. Anything we do in between that is to help you get there. Okay. Tonight, we're going to talk about an industry that $6.6 trillion is circulated through every single day. Okay. And so when we talk about the financial markets, this is the world financial market, okay? Now, when you have our micro markets, like our stock markets, okay, there are billions in those markets, but they're trying to, I hope you guys have seen the writing on the wall. The stock market in the United States, they want to go 24 hours now. Why do you think that is? Because they're looking at the interest in Forex, okay? Foreign exchange, exchanging one country's currency for another country's currency. And they're like, why are people drawn to doing Forex? Well, they're drawn for one, because you can leverage $1 as if it was $100 in Forex. You know that? For those who are brand new on the call, when you get into a broker, you can actually leverage. If you put $1 into an account, the broker says, man, my cat is going crazy. The broker says, you want to say hi to everybody? The broker says, listen, you put $1 in our account, we're going to let you leverage it as if it was $50. Okay? And when you start understanding the leverage that you have, backed by a good skill set, you can make a lot of money. Okay. Now here's the trick. Can I be honest with you guys? A lot of people lose money in Forex. Okay. Now it's not that it's gambling. Okay. Let me make that clear. It's only gambling when you're not educated. Okay. You have those on Wall Street who get educated and they move a lot of capital. They trade a little bit differently than the way that retail traders are going to trade. Retail traders have to be snipers. Retail traders also have to manage risk. Retail traders also have to have the right psychology. It's no different than boxing in a ring. If your psychology's off while you're boxing in the ring, okay, your Forex game is going to be off. Listen, how many of you, for my Forex traders that are on here, I'm a Forex trader, okay? How many of you know, okay, when you take a loss, it's like getting knocked out in the ring. You've been doing good, you've been making money, boom, making money, and then boom, you get that one trade that knocks you out the ring for a second. You're like, oh, ooh, danger became real to you, right? And how long does it take for you psychologically to bounce back into that market so that you can trade again without the fear of being knocked out? It's pretty difficult, okay? Because when you hop back in the market, your fear is so intense that you end up not going into trades you're supposed to go into and staying too long in trades you're not supposed to be in, okay? That's a psyche. And this is why it's very important to get education from individuals like the person I'm going to introduce you to today, okay? These people, like whether you know it or not, when they talk about your psychology and they talk about the basics, it's very important. And sometimes, listen, even for us who consider ourselves to be expert traders or profitable traders, okay, sometimes we need refreshers, okay? It's like a coach. Think about it. You get a Mike Tyson, a Holyfield, okay, a Mayweather. They never got in the ring without their coach, did they? They still had a coach. Why? If they were still the greatest, why did they still have coaches? Because the coaches kept them in the ring, kept them psychologically ready for their fights. And the great thing about Forex, right? If you watch any big time Wall Street show, there is a psychologist in the building to talk to the traders. And so when we get into this retail space, why do we feel things are different? That we could just get on our phones and our computers and just trade without a psychological coach, without someone to keep us in bounds, with someone to remind us of the rules, to remind us about risk management, okay? And so I'm excited today because I'm going to share with you one of our individuals, okay, one of our Forex coaches here in our company. That's what his focus is on. His focus on is getting to your psyche first. Now, he trades. He's a very good trader. But what I realized as I was going through his course, I like to go through all the courses before I introduce the educators, right? As I was going through the course, I realized he specialized in the psychology of trading. And then I had to ask myself, like, wow, this is important information. Okay, get you ready first. And then he shows you how to trade inside the market. Okay, I've taken a lot of his trades, actually, whether he knows it or not. You know, when I first got into the company, I didn't know that, you know, we were in the same partnership and we are the same organization. But I took his trades. I know he's big time on, you know, one of his pairs he likes to trade is GBP USD. Whether he know it or not, I took his trades and I went to profit and I made money, okay? And so the great thing about this company is we have an opportunity to learn from these experts that are in the market. And sometimes I get to turn my brain off and kind of just use kind of the trader's brain because I trust him, all right? Sometimes you just want to do that. I don't want to have to go chart my charts out when I trust the trader here. I know how to chart. I know how to trade, but sometimes I just want to turn it off and say, you know, let him do the work. I'm going to just take the trade. That's it. All right, so the Forex educator I'm going to bring up, listen, okay, he reigns out of New York City or New York, okay? He's been in the sales industry for a while, got into the multiple six figures. He has a multiple six-figure trading account. He manages six-figure portfolios, okay, throughout also educating people inside of this space as well, too, okay? He teaches, he's a fundamental analyst, and he teaches that to his students as well as the psychology of trading, and he's been doing it for 9 years, okay? Here's where we get to gain wisdom for someone who's already been doing it. And we get to see the downfalls that maybe he's had that he's probably going to share and how he learned and got to where he got to, and then as well as him sharing his strategy. So I want to bring up to the stage none other than Josh Sanchez, okay, one of our top educators inside of our platform. I'm going to let him go over strategy, teach you guys what he knows, and then I'm going to share with you how to get access to him on a daily basis. All right, Josh, I know you're on the call here. Are you able to unmute?
Yes, sir. What's up, Randy? Can you hear me?
Got you loud and clear, bro. Let me make sure I spotlight you here. And the stage
Awesome. I
is all
appreciate that.
yours.
Thank you. Thank you. What's going on, everyone? It's an absolute pleasure to be on this call. First of all, that was an amazing introduction, Randy. So pass it back to you. Grateful for you and for obviously the invitation to be on this call. with everyone else. So before I go ahead and give you, ladies and gentlemen, a little bit more information about myself, my background, how my approach or what my approach to trading is, and some of the key elements that I focus on when I trade. Definitely give, I would appreciate if you guys show some love back to Randy, type some sevens in the chat if you're grateful for him, obviously taking the time to set up this call. Because at the end of the day, obviously he didn't have to do this, but he goes out of his way to make sure that everyone here is in the best position to excel, right, in their trading career. So awesome, a lot of sevens. I like the group, Randy. Everyone's so full of energy. Everyone's excited. I love it, man. But without further ado, I'm gonna go ahead and just share a little bit about myself, just to piggyback off of what Randy was talking about. So yes, I am from New York. I have been in the trading space for about 9 years now, and at the very beginning of my career with trading, I was very on and off, right? And I'm not sure if anyone here could relate to that, but I was very on and off in a sense of, life would often get in the way. I was very indecisive of whether I wanted to give more of my time to trading, especially being how difficult it was for me at the time. And the lack of, as Randy was talking about, the importance of having a coach, having, mentors that can walk you through the process, that can teach you, and that can continue to provide value. So these were different areas that I was having a difficult time really measuring as far as priority. So for that reason, I was very on and off. And as time went on, right after COVID, and the lockdown situation happened, that's when I ultimately made the decision. And I said, I have to start learning from people that are credible, right? That have the credibility, the documentation that I'm looking for, so that I can really go full throttle with this thing. And long story short, to not kind of drag along the story here, that brings me to where I'm at now, where I have a lot of goals set for myself in regards to my trading career. But it's been an insane journey, to say the least. It's been a lot more awakening than anything else, for the simple fact that for me, right, I've gone through a lot of realizations when it comes to trading, really where I I guess you could say like a self-assessment type of thing, where you go back and you mentally look at where you were 2, 3, 4, 5 years ago and what your biggest mistakes were. I know somebody was, I think Randy or someone else was talking about like no revenge trading. I think someone's put that on the chat. So that was one of my biggest flaws, right? Revenge trading, letting my emotions get the best of me. And it wasn't until I, again, decided to invest in coaches that ultimately helped me refine not just my approach to trading, but also my psychology, which I think, in my personal opinion, is a lot more important than any strategy at the end of the day, right? Because if we are our own greatest assets, we have to always be, sharp as a tack, and always looking for ways to refine our psychology, refine our mental, right? So that everything else becomes just second nature at the end of the day. So with that being said, ladies and gents, I do want to definitely go over the charts, share with you a little bit about what my approach is to trading. As Randy mentioned, I am primarily focused on fundamentals. Now, quick question: how many of you on the call are experienced with technical analysis, or you've heard the term technical analysis before? Maybe that's what you are primarily focused on right now, right? And for the most part, everyone here is familiar with technical analysis. If you're not, then obviously, we will touch on that on this call. But I would also like to know how many of you are familiar with fundamental analysis and what that really is. So in other words, let me ask you, I guess I'll ask you this way, right? Think with me for a second. Back in the early 1800s, okay, before computers were fully a thing, before we had computers that had the capability of transferring data as fast as they do today, I want you to think about this. What would be your best guess, okay, as to how traders, okay, and fund managers, institutions, how did hedge funds make investment decisions in the markets like the FX market, like the stock market, back in the early 1800s when all they had was a phone and a piece of paper. I want you to think about that for a second and drop your best guess on the chat. And I want to see who here is the closest to what would be the, I guess, the correct answer to that question, right? But drop your best guess. I mean, I'm not expecting everyone to know the answer, but I will share the answer in a second. I just want to see how many people are participating. All right, so newspaper, lots of history in trading. Okay, someone else said radio, TV. Got it. Okay. So this is the reason why I primarily focus on fundamentals, right? Back in the early 1800s, when investors and fund managers, all they had was a telephone and a piece of paper at their trading desk. How they made, as someone said, insider trading, somewhat, but for the most part, right, is they ultimately had to make fundamental decisions based off of where price was trading at a day prior, or a week prior, or 2 weeks prior. So, for instance, you take Wall Street, let's just say, to kind of keep it in simple terms. The traders at Wall Street, right, they would pay attention to where the dollar was trading at the day prior. They would look at where it was trading a week prior, 2 weeks prior, a month prior, so on and so forth. So they were paying attention to the fundamental data that would ultimately give them the opportunity to take a position in the market where they would lean or be more leaning on the side of higher probability, right? So in other words, they would make their decisions based off of the information that they collected, and they would say to themselves, well, where does the dollar have the higher probability of trading at today or tomorrow based off of the information and the data I've collected from yesterday and the month ago and 2 weeks ago, so on and so forth. So this is the reason why when someone approaches me about trading and all they have to lead with is lines on a chart, I ask them the simple question. So what do you do when you have your lines drawn and price doesn't do what you think it does, or it has some sort of an impulsive reaction outside of your thesis, outside of your bias? How do you handle that? How do you explain that? Because I used to be the person that would have my charts drawn up and I'd say, well, why did price just do that? That's so random. That must have been the banks. That must have been the market makers. That used to be my mentality. And until I started to educate myself on different components and different fundamental indicators, I slowly started to understand why price decided to react, why the market reacted the way that it did during certain events, during certain times of the day, so on and so forth. And it's not to say that, fundamentals allows you to take a peek into the future. I'm not saying that, but what I'm saying is it allows you to better gauge your approach so that when you do go over your technical analysis, you already have a fundamental understanding of what is going on with the economy that you're trading against the other economy, right? The currency pairs. So primarily what I focus on with is the underlying data with fundamentals, the type of prints that we get. I collect that information, I keep it on an Excel sheet, and I track that so that as we continue to get these prints, so I'll go ahead and now share my screen with you for a second here so I can show you what I mean. So hopefully everyone can see my screen. If you can type a 1 on the chat just to make sure we're all good. Perfect. Okay. So what when I'm talking about when I say tracking fundamental data, I'm referring to leveraging resources like Forex Factory, for instance, or trading economics. How many of you are familiar with either one, right? Forex Factory for the news events, trading economics for news events as well, but also to better to give you more information, right? I like trading economics a lot better because it gives you more than just the surface level information on what's taking place in the market. Trading economics actually goes in depth and informs you on where each economy stands in terms of strength and weakness. And the reason why it's important for you to know this as a trader is because you can easily be putting yourself in a position where you are trading two weak economies. For instance, let's just say hypothetically, Euro USD, right? The euro is currently weaker. The economy in for the euro is trading weaker, and so is the dollar. So from a fundamental stance, you may have a technical bias, right? You may have your support and resistance drawn up, your Fibonacci retracement levels, so on and so forth. But if you fundamentally understand that both economies are trending weaker right now, they're trending lower, then you would know that it would not be very logical to trade in that particular market or to involve yourself in that pair, right? So this is why I say it's important to inform yourself on, okay, is the euro, what is the economy in Europe like right now? What is the European Central Bank? What's their interest rate stand? What's their, their GDP stand? Where does their inflation rate, where does that lie, right? Same thing with the US, same thing with the Fed. So these are all things that as traders, I think it's important for us to take into account before we start going into the technicals. Because if you know, for instance, that the dollar has been printing positive news, like we've been getting positive data, for example, for the labor market, which is a very important fundamental indicator, right? When we're talking about inflation, for instance, right? If you know that the labor market in the US is strong based off of the fundamental data that you've collected, then you know that you're looking to trade longs on the dollar against, let's just say, another economy that may be having a weaker labor market that has been having negative prints in their economy, like Europe, or let's say the Canadian dollar, for instance. So it sounds a bit complex, but again, going back to Randy's point at the beginning of the webinar, this is why it's important to have a mentor, why it's important to have someone with experience who can basically let you know at the beginning of the trading week, this is where these central banks are currently trading at. This is where this economy currently stands. And this is why I'm currently shifting my focus into X, Y, and Z, right? So I'll give you guys a quick example, right? And then we'll get into the charts. During the news that came out for the events that were going on in the Middle East, right? One thing that a lot of people were tweeting about and were posting about on social media was commodities trading higher. And during this time, the dollar was also trading higher. Now, a lot of price action traders, right, when all they know is price action, they're left in limbo because for price action, you look at gold, for example, and you know that if gold is trading higher, then the dollar is supposed to be trading weaker. So when they look at economic events like that, where that situation was going on in the Middle East, the conflicts, the geopolitical conflicts, and all that stuff, uh, you see the dollar rally as well as commodities, right? And the reason for that is because commodities like gold and silver, and I guess we could debatably, some people say the dollar could also be considered a safe haven asset. Yes or no? I mean, it's a bit of a fine line, but at the end of the day, the reason why commodities as well as the dollar rallied during that week that all these things were going on in the Middle East is because investors shift their focus into safe haven assets. That's what they're known as, right? So from a fundamental stance, kind of going back into fundamentals, when you understand that whenever there is geopolitical tension in the economy, every investor, every hedge fund goes back and falls back on gold to protect their assets. They long gold, they long silver, they long commodities, platinum, etc. Right? Because again, these are what's considered safe haven assets. That's why gold rallied the way that it did. That's why silver rallied. That's why platinum rallied, so on and so forth, right? So when it comes to fundamentals and understanding, okay, this is why these things are happening. This is why, even if it's a temporary move, it's important to understand why the market reacts the way that it does, because it's not sufficient for us to pull up a chart, for instance, and say, well, this is my support and this is my resistance. Well, then how will you explain if price breaks above your support and breaks above your resistance, or if it breaks below your support and breaks above your resistance? How would you explain that, right? If all you're sticking to is technicals. So again, you got to kind of mix in a little bit of fundamentals. One of my mentors, he always says that you should lead with fundamentals as your primary, and your secondary should be technicals. So if you know that on the fundamental side, the dollar is trading higher, right? And you've been collecting the data that shows that the interest rates are going to remain higher for longer, for example, and the labor market is staying firm, then it makes sense, right, to buy the dollar. Look for areas where you can buy the dollar at a discount. This is what I teach my students. We look for different investments, different assets where we can buy at a discount and sell at a premium. That's always been my motto, right? Buy at a discount, sell at a premium. So it's no different with FX. It's no different with the DXY or USD Swiss. You're looking for the best bang for your buck. You want to buy when price is as cheap as possible. You want to sell it when it's trading at a premium level, when it's trading at a premium price. Now, um, I'll pretty much tie that into technicals to kind of show you guys a little bit about how I mix or combine fundamentals with my technicals, right? So with the technicals, I like to keep my charts very simple, as you guys can see. I'm not a big fan, and I mean, to each their own, it's totally fine. I'm not a big fan of indicators. I'm not a big fan of having all these squiggly lines on the chart. I mean, I think, yes, it makes your chart look pretty, but I think that I like to focus on simplicity, right? I like to keep my charts very simple, because at the end of the day, when you have a lot going on your charts, remember that it does have a psychological impact on your emotions, and it ultimately makes you take illogical decisions or make illogical decisions in the market, where you later on go back and you say, why did I place that trade? Why did I make that decision, when things were not aligning the way that I needed them to, when I wasn't following my strategy or my confirmations. So I have a list of confirmations that I follow. I'm a very picky trader, and this is why one of the things I teach in my sessions is patience, and that's also why you guys see that in the background here on my webcam there, right? I have to look at this sign every single time I get on the charts, because if I don't remind myself that patience, right, is one of the best things that you can lead with when it comes to trading, I'm gonna pretty much leave an open door for emotions to take control. And the moment you allow your emotions to get a hold of you, uh, you're on your path to consistent losses and blown accounts, right? So uh, I won't touch too much on that psychology, because I really want to go over the technicals first. But what I do, and I'm not sure how many of you will be familiar with these terms, but I like to focus on liquidity, right? Now, anybody here familiar with liquidity? You guys have heard like the term before. Do you know what that is? Because I know for the most part, I'm not sure. Well, I'm not sure where you guys are currently at in your trading career, but um, awesome. I see a lot of yeses. If there's anyone on here that does not know what liquidity is, I'll just explain it to you this way. Liquidity is, in essence, are levels in the market that carry a lot of volume, that carry a lot of positions, right? These are areas in the market where investors, whether it's retail traders or institutional traders or asset managers, whatever the case is, they have a tremendous amount of positions that are accumulated at this level. Now, what happens is over time, these positions, right, this accumulation that happens in the market, what happens is the market has to take these positions out in order for it to rebalance itself out once again. Now, a good example of that, right? And liquidity can appear in the market in several different ways. Believe it or not, I'm not sure if you ladies and gentlemen already knew this, but the things that we call equal highs and equal lows, those are that is liquidity, right? When we look at, for instance, let me take a clean chart here. So when we look at equal highs, okay, and then we look at equal lows, this is all liquidity. In other words, when market is trading, let's just say, take my drawing tool here. Market's trading lower, hit the low, tapped it again, hit the high. Okay. This is all liquidity that's taking place. So what a lot of us define as equal highs and equal lows is all liquidity. These are buildup of orders that are taking place in the market that have to be taken out. Now, the question here, right, is, well, when do we know that, or how do we know when these orders are going to be taken out? The truth to the answer, right, the truth of the question, sorry, is that we really don't know when this liquidity, right, that is still in the market going to be taken out. What we do know is that the level that has been tested the most has a higher probability, okay, of being swept first. In other words, the area that where price has tested several and several times carries a lot more accumulation than the area that has gotten less retests. So based off of this example, you can, again, trading is a game of probabilities. You want to position yourself on the side in the market that carries the higher probability of where price is going to go. So if you see that there is a lot more accumulation taking place at these lows rather than the highs, right? Then we can automatically, right, make the educational assumption that price has a higher probability of sweeping the lows before we get our move to the upside to then take out the highs. Right? Does everyone understand that? So this is why when I look at my charts, I like to identify liquidity. Where is the liquidity currently and in the market, right? So I use fundamental to understand where price is at on the bigger time frames. Where is it trading? What's the economy currently at? Where does it stand? Is there any data that will provide volatility in the market that will allow me to position myself accordingly so I can make money? And if the answer is no, then it's not a problem. I move on to another economy. Is there another economy, another central bank that is providing me with data that I can leverage so that I can go ahead and combine that with my technicals and position myself accordingly? So I'll give you, ladies and gents, another example. And this is a example based on a position I took this morning. I believe Sincere and Mike that were with me this morning were trading with me, right? So I'll give you another example. I had my technicals marked up. Okay, I had the liquidity that we see here, right, for the dollar Swiss. Here's two things that I know right now about the dollar Swiss. From a fundamental stance, the dollar has not shown enough data as far as the labor market, as far as interest rates, for us to have a change in narrative and say that the dollar is going to have a market structure shift and go in the opposite direction. Remember, since the beginning of this year, right? We take the beginning of the year. Let's highlight that for a second. This is the beginning of the year right here, December 2023, January 2024. Since the beginning of this year, every single fundamental data that we've gotten relative to the dollar has been nothing but validation that the dollar is in no hurry, it's in no rush to trade lower. So this is why when I see people that have this idea, right, that, well, my technicals say that the dollar is going to trade lower and the dollar is going to start falling. That's great that you have technicals, but what else are you leveraging as confirmation? What else are you using as your confluence? Because technicals can only get you so far, right? And I'm saying that in the nice way. One of my mentors is very aggressive with how he defines technicals and how you just rely on technicals. You have to have an open mind, an open perspective. Allow yourself to be the trader that is willing to look at the market from different lenses. Because if you have a fixed lens like I used to have, and all I relied on was order blocks and supply and demand, when I was only relying on that, and let's just say the market would do some outlandish move, right? Some crazy move, I would be left in limbo. I'd say, well, why did it do that? And little did I know, all I had to do was go on Forex Factory, go on Trading Economics, do a little bit of research, and I would understand, okay, this is why this economy is currently doing X, Y, and Z. Now, I will give you guys a bit of an insight on where I think the dollar could be heading over the course of the next few weeks to the next couple of months. Okay. And then I'm going to go back to breaking down the idea that I took this morning. All right. So as of right now, as I said before, the dollar has been demonstrating very little data for us to go and say that it's going to be trading in the opposite direction, right? So once again, since the beginning of the year, we've been overall bullish on the dollar. So right now, this is what I'm thinking. And I would like to say at the end of the day, I don't have a crystal ball, although I wish I did, right? That'd be nice. I'm looking to position myself on the side of what banks like Bank of America, JP Morgan, Wells Fargo, because they all trade FX. I don't know if any of you knew this, but all of these banks, JP Morgan, they trade FX. Bank of America, they trade FX. They send fundamental documents every single week to clients, right? And these documents, they're leveraged for traders to position themselves accordingly using that fundamental research. So right now, with the information that I've been tracking thus far, any downside that we get on the dollar, in my opinion, will be short-lived. Okay. So any negative prints that we see will be short-lived, will not be enough in order for us to say, well, there's going to be a change in structure. The dollar is now going to provide us opportunities to trade lower. And here's a bit of some insight on why I think that is. So let me pull up Forex Factory once again. I will be doing a lesson on this tomorrow, by the way. I will be teaching the difference between CPI and PPI for anyone that does not know the difference. So today we got the PPI print, all right? And I'll kind of keep this short and simple. Today we got the PPI print for the dollar. It printed positive. We see that, right? We got a firm print, yet the dollar traded lower. A lot of people look at this and say, well, that doesn't make any sense. We got a positive print for the dollar. Isn't that supposed to be good for the economy? No, it depends on the type of print. It depends on the type of fundamental indicator. Another example, if we get unemployment claims for the US and it comes in hotter than expected, unemployment rates, that means that there's a lot of people in the US economy that are filing for unemployment. That's bad for the dollar. This is why I say not every positive print is a good print, right? So this is what happens. We get a positive print on PPI, which is not as important as CPI, right? Tomorrow we're going to get the big this is going to be the big kahuna. This is going to be the big one that we're going to see. Most volatility this week is going to happen tomorrow morning. PPI, what happened is, and how it reflects on the charts when we talk about price action, the dollar wants to trade higher. We see the wick that it gave us. It wants to trade higher, but the Fed, the market understands that it is not ready just yet. There has to be more data to show that the dollar is going to take us back into the previous highs and even higher than that. Bank of America right now anticipates the dollar for the third and fourth quarter of this year to trade at 107. At 107. We're not even back at 106 yet. So all of this information and these documents, I share this. I share this on the GFU Connect app. I share this on my page, right, on the GFU Connect. So I share this with you guys. I give you updates. Yes, I know it may sound a little bit boring, but listen, we all want to make seven figures trading, right? We all want to manage a seven-figure portfolio. I would hope so. So in order for you to be at that point, position yourself that way, you have to get really good at reading this stuff, at understanding this and collecting this information, right? Again, what separates, and if I haven't mentioned this before, excuse me, but I'll mention it now. What separates us retail traders from institutions and hedge funds, the only thing that separates us, it's a lot of people will say technology. Yeah, there's a small percentage of that equation that ties into technology. But the biggest factor or the biggest element, right, is how fast information travels to the desk of these traders. That's the reason why they're able to position themselves as well as they are, is because when you're working for Wall Street, when you're working at a hedge fund, information travels fast, man. So what we're doing as educators, what I do as an educator is I focus on grabbing the information as fast as I can, using that information to position myself in the market, and then deliver that idea to you on a silver platter. That's what I do. Until you get to the point where you can confidently track fundamentals and understand what's going on with the central banks, what's going on with inflation, with interest rates, et cetera, the labor market, all that, until you understand how to read that data, I say to people, leverage me, allow me to do the research for you, allow me to filter what matters and where our focus should be versus what doesn't matter, right? And then I deliver that to you guys and we see everything play out on the charts. And if it doesn't, because there's still a probability that it won't, if it does not, then we reassess the data and we wait for the next opportunity. This is a big issue that a lot of traders have, is that when they place a trade and it doesn't go their way, they just close their charts. They just give up and they call it a day. It's okay to stop trading if you have a losing trade, but you have to go back and face the music. You have to assess, why did your trade go against you? So before we wrap this up here, just to kind of go back into the dollar Swiss, this was a trade I took this morning. We got the print that came in hotter than expected, right? But taking in the information we've gotten previously on the dollar, we have gotten some slight negative prints on the dollar last week, right? Including unemployment. However, the labor market's still firm, okay? The economy in the US is still, the rates are remaining higher for longer. Powell, right? Fed Chair Powell said that they are not interested or looking at making any rate cuts right away, even though it might be on the horizon. And they're definitely not looking for any more rate hikes, right? So using that information, what I did was I saw the dollar rally, a temporary rally, a false narrative, as I like to call it. And as soon as I started to see the pullback happen and this week taking place, I said, all right, well, this is telling me that the dollar's not ready to give us another leg up. So what that show tells me is that if the opportunity is there, I can trade the dollar. I short the dollar, set my stop right above this wick, right above this area of supply that I had previously marked up. And then I just target the previous lows. That's it. Target the previous lows. And as price is moving in my favor, I start to manage my trade. How do I manage my trade? Because this is another issue that a lot of traders make, is where they place their trade and they think that that's it. All right, I placed my trade, I set my stop loss, I set my take profit, I'm done. The moment you place your trade, you need to focus on how can you eliminate the risk that you just set on yourself. That's the number one question that needs to be going through your head. How do I eliminate the 18 pip stop loss that I just set for myself? That's what a professional trader does. So you could be saying to yourself, well, I accepted the risk, right? I accepted the fact that if price goes against me, I will lose $1,800 or $180. That is true. But now consider the opposite. If it goes in your favor, how are you going to manage that? Well, you reduce your risk. As the market continues to move in your favor, you minimize your risk and you continue to minimize until guess what? Now you have a risk-free position. The market has no option but to give you money. That's it. So although price did not tap into my target, I still took partials. I eliminated my risk. Money was secured. And I went throughout my day. Trading should not be a thing, in my opinion, should not be a thing where you're staring at the charts all day long. Right? So it should be a thing where you trade, you're in and you're out and you're done. You document what you just did in the markets, right? And you're done. You go on throughout your day. That's it. So similar to other educators, I do focus when it comes to the technicals, I focus on smart money concepts. But one thing I will tell you guys about the smart money concepts thing is that, and I'm not sure if a lot of you know this, I want you to look at this. Look at this book, for example. I'll explain to you in simple terms, right? Look at this book as smart money concepts. Okay. Now, inside of this book, every single page that you see in this book is a different strategy, is a different indicator, technical indicator, is a different elements. Like you have one page is the order blocks, right? Another page is your supply and demand. Another page is liquidity, so on and so forth. The problem that traders make is they try to learn every single page in that book. They try to master every single thing. What I do is I focus on one or two things with trading technicals. I focus on liquidity, supply and demand, and order blocks, as well as ranges. So like Asian ranges, Asian highs, Asian lows, so on and so forth, right? That's it. I just keep it as simple as that. And I have my list of confirmations. I take my positions off the 5-minute, the 15-minute, but before I even get down to that, I look at the fundamentals, then I look at price on the 4-hour. I mark out my areas of liquidity. Okay. Again, where does price have the higher probability of trading at in the near term, right? Versus the long term. And then as I continue to scale in, I start looking at other elements like supply and demand. Then I take my Fibonacci retracement and I measure supply and demand that way, right? And from there, I continue to just scale in, right? So that's really what it is for me. I like to keep it simple. I like to keep my charts clean. I don't like to get too crazy with it, but I will say this to you, ladies and gents, is that all of this stuff sounds good. It sounds great, right? And I know I see a lot of you on here. You're very excited about this information, and I'm glad that you are. But at the end of the day, and I don't mean to sound cliche when I say this, and maybe this is just for me, or maybe it can resonate with you. What really made the change in my trading career for me was me refining my psychology, taking the time to understand that number one, not every day has to be a trading day. What happened last week? No volatility whatsoever till Friday. What are you going to do Monday, Tuesday, Wednesday, Thursday when the market's doing nothing but just taking people's money? You have to put yourself in the shoes of a professional. Professionals know when the right time to execute is. Professionals don't wake up every morning and they say, all right, well, let's look at the charts. Let's see what's going on in the markets, right? They don't do that. They go over their bias on the weekends and prepare themselves for the week ahead. And if the market does not provide us with the liquidity and volatility that we're looking for, then sometimes you have to just learn to sit on your hands. Continue to study, continue to backtest, continue to refine what's called your edge, right? What separates you from everyone else. So again, I focus on just simplicity, liquidity. Where's the liquidity currently at? Okay, I have all of this accumulation taking place on the dollar Swiss off the 12-hour. That means that there's a high probability right now off the technicals that the dollar Swiss, if we are to get a leg higher for the dollar, there's a higher probability that the liquidity that's left in this market is going to be taken first, right? Because the dollar has always been trading stronger against the Swiss franc, right? So right now, and we have CPI coming in tomorrow. So if we get a good print on CPI and the dollar trades weaker going into CPI tomorrow morning, right? Because the dollar can very well do this, or the dollar Swiss could very well do this. For tonight's London session or tomorrow pre-New York session, we may continue to get a continuation, right? Weaker dollar. And then CPI can come in hotter than expected and take us back up to the upside. And what that would do is just, once again, more accumulation, more liquidity sitting at this level. That's scenario number one. Scenario number two is that we get an instantly hot print, right? And the dollar just rallies. That just reinforces that, again, rates are remaining higher for longer, labor market staying firm, no data indicating that the dollar is going to continue to weaken, which is also fine. That just means that we position ourselves for the following week to trade longs on the dollar. That's scenario number two. Either one of these scenarios could play out, right? And scenario number three, of course, would be price taking out that liquidity, right? We get a less than forecasted print, takes out that liquidity aggressively. And then by the end of this week, we can start looking at some rebalancing on the dollar. But this is why with fund, I like to wait for the data to print first, right? So with that being said, I hope that this call was of value to you, ladies and gentlemen. I know I kind of went on and on and on. I went on the deep end, Randy. I'm sorry.
Oh, no, you are amazing. What? What? I'm getting text messages. The group is going crazy. You absolutely did what you know how to do. Okay. And I'm going to show them how to get access to you throughout the week, all week long. Okay. So let me go ahead and go here. Let's see, add to spotlight. First of all, while we got him here, listen, we don't even know that we went an hour, y'all. Okay. This is why you were so good. Okay. You're music to my ears, the very patient, calm voice, which the psychology, bro, you took a lot of the traders that have been here. We trade, right? And so listening to you, yeah, we have some newbies that are on the call, but for a lot of us, this was good reinforcement. And I learned some things on this call. Okay. You know, you're very patient. You actually talk to what you're seeing and you show us what you're seeing. You know, some people have the talk and they just say liquidity, but they never show it. And you show them where the liquidity was, what's likely to happen. Like, I hope you guys really understand how valuable this session was, okay? And I'm gonna say this right now. I think people were sleeping on Josh, okay? If you're on this call, don't sleep on Josh. Tomorrow, listen, I'm going to show you guys how to get access to him. Thank you so much, Josh. If you guys got value, they're already blowing it up without me saying it. You guys got value. Go ahead and drop the fire emojis. Go ahead and drop your sevens. Show them love. Make this chat go crazy. And let me show you guys how to get access to Josh every single week here, okay? So appreciate you being on, Josh. Thank you so much. I'm going to show them how to get access to you throughout the week. So here we are. As we bring this call to a close, give me about 5 or 10 minutes. I'm going to show you guys how to get started with us. Okay, we have several different packages. Now, we have 3 verticals in our company. And I'm going to share with you, once you sign up, you're going to get a back office that looks like this here. Okay, you get access to our GFU University. We're going to talk about the travel. We're going to talk about a little bit of the products. But let's just go here to GFU University. Here's how to get access. Once you become a member in our company, okay, you're going to get access to all the universities. Okay. We literally have a university here. Okay. E-commerce, crypto, Forex, finance. Okay. Teach you about the finances, but we're going to focus on Forex right now. This is what's sexy right now. Okay. And so we have a lot of educators. Okay. Last week we had Jay Bonham on. Today we had Josh Sanchez. Amazing. So every Sunday at 7 p.m. when the market is opening up, the market opens around 4 p.m. Central, 5 p.m. Eastern or something like that. Okay. He's on. Okay, showing you guys the market, doing Forex basics. And then on Wednesday, you get access to him tomorrow. Okay, so I would tell you, everybody on this call, okay, if you're already in, show up because it matters that you show up on his calls. Okay, show up to his calls, listen to his education. I'm going to also show you his master course that he has on here. I went through his master course. You're going to learn a lot by going through his master course as well, too. All right, so you get access to him twice a week. But also, when you download the GFU Connect app, I want you to go inside your app right now, Google Play, or your Apple Store, go ahead and download GFU Connect, J-I-F-U Connect. It's going to be a black app with a bird on it that says GFU below it, all right? That is our social media trading / mentorship app. You actually can communicate with Josh all day long. You can like his stuff, just like if you were on Instagram, but it's ours. So we literally have a wealth app that you can talk to each one of these traders. They throw out their ideas, okay? Josh always throws out his trading ideas. So you'll never miss a push notification if you download that app once you become a member of our club, all right? For those that are on here, when we talk about the money, don't get scared. I'm going to show you how to at minimum, before you leave this call, how to at least secure a spot with us, okay? And if you buy something, we'll add you to our community as a holding spot until you actually become a full-up member. But until then, listen, you can plug into the free calls, okay? You can plug into the different events. You can still be a part of the organization. So I'm going to give you guys several routes to get started with us. But let me tell you, either way, you should get started with us. And I'm going to give you that route to get started, okay? So that's our universities. This is what you have access to. We also have the chat rooms on the computer, but you'll have the app that is going to do this, okay? You can follow whatever traders you want. We have our market ideas that are here, okay, where you have traders talking to each other. The app is much better because it's more interactive. Here's our Forex chats here. So you have all the different, whoever you're following. If you follow the traders, you're going to get it here. So make sure, and I will show that later. News events, and then we have scanners. Now, listen, Josh already told you off cuff, he likes a clean chart. And listen, that's the best way to learn fundamentals and learning market structures, what he was just teaching you. But we do have scanners for those who do want to do some strategies and different things out there. So from sniper to price hunters, I'm gonna go with one that's probably more aligned with most of the educators here. So showing some of the imbalances on here. You guys will learn this through our Bootcamp Academy. This is actually giving you, okay, some of the information that you need. And you guys can kind of see this, right? It's no secret this is an uptrend. All right. So, and as you learn what all these different things mean on here, the imbalances that it's finding right here automatically for you, instead of you having to do it, it's giving it to you. All right. And so just like Josh was talking about, we wait for things to fill in and we go in for our trade. But there's a boot camp that's going to teach you how to use the smart scanner. Okay. So I just want you guys to know what we have. We have so many different strategies here that you can learn from, as well as we have our top educators that are going to teach you how to use this without having any of these indicators, okay? And so those are our scanners you get access to. Like I said, we have 3 verticals. I'm going to show you the additional ones. I know you're here for trading, but that's okay. We're going to do trading events abroad too. We're going to go to Mexico. We're going to go to Jamaica. We're going to go to Bora Bora. We're going to do trading events there. Okay, we're going to do fitness events in different locations. So we are a travel company as well too. So I want to show you the portal that you get when you do our digital pack. And hear me closely. This is our actual portal. We're better than Expedia, okay? We may not beat them all the time, but we beat them most of the time. And so I just did a quick search in Los Cabos, San Lucas, and here's one of the resorts here, Villa del Arco Beach Resort, okay? It's a $5,000. This is for 7 days, $5,000. GFU gave us a $2,700 discount. Our price will be $2,416. Now check this out. When you become a member, the lowest package is going to give you these things called free trials that you can give out. You can literally give your friends and family and coworkers and anyone a free trial to go in and create their own account for free, okay? And when they create that account, they'll actually get a portal and they can actually order products as well too, all right? Now, when they come to the portal, here's the difference. They're going to get half of this discount. Now, are you ready? When they get half the discount, guess where the other portion of the discount goes? It goes to you. So anytime you give out a free trial, y'all, you got to, I hope you're catching this. Anytime that you give out a free trial and someone books without being a member of our company, but they book by being one of your free customers, you basically get to keep half of the commission that you're getting from travel. And so we're getting paid more than travel agents, y'all. And we can do it digitally, okay? And so this is just a plus of you becoming a member inside of our company. So that's that. And let me show you. Let me show you. It shows the comparison. So here's what it says that Expedia has it for after taxes. This is ours with taxes, okay? After taxes, it's $5,129. Don't believe me? Let's go see, okay? I have it right here, okay? This is the resort, Villa del Arco. So let's go here. I pulled it up already, okay? They're almost sold out, but here's the one. And they said their member price is 18% off, okay? So you get it for $4,572. We still beat them, okay? With all that said and done, their price is $4,562. They gave you an 18% discount, okay? Which it would have been the $5,000 like we said. So we show you what that discount is on every single one so that you don't have to guess. This one gave you $1,500 off. Let's see what the other one said. The lowest price on the internet was $3,380. We gave you a discount off the lowest price. So our company always gives you the discount off the lowest price. And if you give out those free trials, you get half of that anytime any customer goes and books off of your site, okay? Then lastly, when you become a member, okay, whether you do our lowest package or whether you do our grow package, okay, we're going to give you an elite resort certificate, meaning we're going to send you on vacation for free, okay? Well, not for free. You're becoming a member. Okay, so if you become a member, you get an ERC voucher. Okay, you get access to 49 different resorts. You go book for $150 administration fee, and you pay $60 in the taxes, and then it's $0 there. Okay, this resort costs between $5,000 to $11,000 depending on which one you go to, and you're getting it for less than $500. You're getting it for the membership here. All right, so that's the ERC, and then we have a cruise incentive that we do for our entire company. Okay, how do you get access to that? By accumulating points. Where do you get points from? You get points from people booking off your travel website. You get points from registering other Forex people who want to learn about Forex. Okay, every time someone signs up, you get 50 points. Okay, depending on which package, they 50 points to 125 points. When you accumulate 500 points, we're gonna send you on a free vacation. Me and my wife in the first week, we got on this free vacation. We're going, I think it's in September. Okay, so right now you have a little bit less than 100 days to qualify. Okay, once you get to 500 points, it's a full trip for one person. You get to 1,125 points. This is where we got to. Okay, we got a full trip for two people, one room private occupancy, up to $2,000 airfare. Guess what? Me and my wife, we go in first class on a Caribbean cruise coming September, paid for completely by this company. And I still get my trading education. I still get my real estate education. I still get to get my supplements in there. So let's go back here. Okay, don't believe me? Here we go down here. You see this? 1,400 points. We qualify. Okay, and it's still going. We're not even over yet. So and then lastly, folks, it's my first time doing a product company, and I love it. We're actually about to do a fitness challenge. Okay, if you don't already know, there is an epidemic of health problems in the world. Okay. And people are not educated about antioxidants and they're not educated about collagen. And here's what I'm going to tell you. If you change out for 21 days, I'm going to challenge you to change out your sodas, change out your sugary drinks for 21 days. Drink collagen. Drink this product here. And watch the way that your body starts to change. If you follow me on social media, you'll see that I had tremendous change over the past 60 days, okay? And I've always done these things. So you're going to get access to these products as well, too. For those... So what does it cost? It's $165 a month is what you pay in the membership. Okay, what do you get? Let me go to the full package actually. Let me share the full package we got with you guys. And then we're coming to a close. Like I said, we're gonna have a Signals app that's coming as well too. The G2 app will be travel. We already talked about our products here. Gen 3 collagen. And then lastly, what is the cost? Okay, we'll go over the compensation. Just know that our compensation plan pays out tremendously. Okay, we didn't even talk about that, but our compensation plan goes all the way up to $500,000 a month. For those who want to build it, talk to the person who got you on this call. They're going to share the compensation plan with you. I'm going to tell you right now, we're in pre-launch right now. If you're in this thing and you understand how a binary works, secure your spot. Okay, when you secure a spot, any customer that comes in from the time that you sign up is on your team. That's a big deal in a company that pays $500,000 a month. So here's our products here. Lowest package is $295. You're gonna get a G-Food you can get the G-Food vacation voucher. You're gonna get 3 products. It says $295 here. You get actually one of each of these. So you get the Live product, the Gen 3, all that, and then the monthly is $165. You can use Klarna, okay, to make payments for the initial cost. They'll break it up in 4-month payments all the way up to 24-month payments. Most people do decide to come in to grow. You can sell these products, y'all. You can set up an LA Fitness or something, customer awareness, sell the collagen, all that good stuff, and make money off of that. All right. So it's $11.50 for the grow pack. You can have these split up in 4 to 24-month payments, and then it's $165 every month from that to maintain the membership. Every year you'll get a vacation for being a member with us. So you get your GFU and your ERC voucher every single year. You have a paid for vacation, okay? $11,000 vacation, okay? That in itself already pays for the membership, but you'll also get the product, access to GFU Live, and then of course, access to bonuses. When I came in, of course, I went big. I did $2,600 pack. I love all the products for real. I really take the products. I drink collagen all day long. I take my live packs twice a day. Please go research antioxidants. I had someone ask me today, like, what's the big deal about antioxidants? Okay. And first of all, I think we got to first understand what are oxidants. Okay. Oxidants, when they inundate your body, okay, they're just, I call them soldiers. When these soldiers, they're bad enemy soldiers that enter your body, their goal is to cause havoc. So between pollution, smoking, stress, cortisone, all those things that are released in your body, we're made up of electrons, molecules, neurons. Okay, neurons are in the brain, electrons throughout the body. You guys kind of know where I'm going biology wise. Well, guess what? These molecules is what makes us up as human beings. Well, what happens is when these molecules are attacked and they deform, okay, this is where disease actually comes in. Okay, so if you guys are seeing around you, and I'm not mentioning the C word, I'm not going to mention all the things that people are catching the D word, okay, but there is disease that is happening rampant, especially people after 40. Okay, why? Because things are catching up. Your body is now wreaking havoc. We call them free radicals. The free radicals are bad in your body. So what happens? If you don't eat a lot of fruit, I eat a lot of fruit, okay, you don't have to take the live package that we have. All right, I like blackberries, I like blueberries, I like strawberries. I eat all that every single day. It's expensive, but I love it. I love fruit. My household loves fruit. Okay. But whether you love fruit or not, okay, resveratrol is what's in our live pack. And if you take that live pack twice a day, here's what I can tell you. You're releasing antioxidant soldiers into your body to fight off the free radical soldiers that are killing your body. Okay. It's a preventative measure to ensure that your body does not go out of balance so that disease can come in. I don't know if you guys ever, if you ever heard the word where when your body goes into balance, disease can't, when your body is in an alkalinic state, disease cannot enter your body. Okay. Whole nother conversation. I know we didn't come here for that. You guys came to trade, but I had to let that go because it's in my head and it's a knowledge that I have. And I care about people's health. I care about my health as well as anybody I come in contact with. So I love educating on that. So not only are you going to come here and get your financial advice, you're going to come here and get fitness advice. You're going to come here and get healthy. You're going to be in a community that loves you. Okay. You're going to be in a community that will not let you fail unless you want to fail. Okay. So anyone who invites you on this call right now, listen, anyone who invites you on this call right now, they're not inviting you just to make a sale. Okay, that's far from that. Okay, because you got to understand about this industry. When you invite someone into the circle, we kind of relate it for the rest of our life as long as you're here. Okay, and even when you leave, there are people I met in my industry that I'm great friends with. Okay, godparents and things of that sort. So you're not just entering, okay, into a company. You're entering into a family that has an interest in you becoming wealthy, that has an interest in you learning, that has an interest in making you a better person because you represent what our company stands for. And so if you liked everything that we talked about today, I want you to get back to the person who got you on here because they really want to get you started. Get with them, let them know, hey, which package should I do? Or let them know what your position is. You may say, hey, if you don't got the money right now, maybe you guys can solve how you can get the money to get inside of our company and be a part of our team. But the name of our organization is called Legacy Worldwide for a reason, because our goal is to create legacies for around the world. You have something that you want to create. And the chains that we have in our organization is breaking chains of the things that have been holding you back in your entire life, breaking the chains of poverty, breaking the chains of bad health, breaking the chains of things that have been mentally impacting you or psychologically impacting you as well too, by putting you around a great community and a great circle. So I appreciate you guys being on. Like I said, get back to the person who got you on this call. Let them know that you're ready to get started. And I want to personally welcome you to the Legacy Worldwide family. Thank you guys for taking the time and being on. And in everything that we do, let's continually leave our mark and leave our legacy. I appreciate you. What's up, Joe? Good seeing you on here too, bro. Let's get it. Peace.